This is The Wealth Puzzle with Michael Mansfield from the Lynn Group. When a part of your financial strategy is out of tune, your long-term goals, your retirement savings, and your legacy can all suffer. With many years of experience in the financial industry, Michael provides his clients and prospects with the information they need regarding Social Security, retirement income planning, wealth management, and much more. Listen in as we address your financial concerns and provide helpful solutions to put you on the path to achieving your retirement goals. And now, here is The Wealth Puzzle with Michael Mansfield.
Hi, everybody. Welcome back to The Wealth Puzzle. It is myself, Owen Hill. I will be doing this video alone. No Mike, no Tana. I think you guys have gotten a few videos in the more recent past from Mike. So it's only appropriate that I jump on and make my own. We've got a lot to talk about. Today is a big day. It's tax day. Unless you, of course, filed for an extension, then you've delayed the refund check, or maybe that check you've got to write to the IRS. You've delayed it till October. But for the vast majority of us, today's tax day. And so with that, let's talk a little bit about the big refund checks that we're seeing. I'm going to throw this up here on the stage. So the IRS, this comes directly from their website, reported that the average refund is actually up 11%, sitting at roughly $3,462. That's fantastic. I hope that every one of you guys are getting big refund checks. The IRS has already pumped $242 billion back into the economy. That's a fantastic number. Think about that. Right. While the consumer sentiment is low because of gas prices and the Iranian conflict, liquidity is actually at a record high. But it's not a massive inflationary liquidity spike. It's coming from tax dollars. So that's a good thing. The actual floor for the market is much higher. People are feeling bad, right? Things are kind of unsettling. There's a lot of worry. There's a lot of big headlines being thrown around. And because of that, we've had a lot of volatility inside of the market. So I actually wanted to talk about that as the next order of business. What happened, right? Over the weekend, JD Vance was supposed to go to Iran and strike a deal that would open everything back up, and we would all be happily ever after. There'd be no high oil prices, and this whole Iranian conflict would be behind us. But that didn't happen, right? Instead, right, we found out that there was no deal struck. They got back on the plane and they flew home. And then on Monday, it was the day of reckoning, the day that everything was supposed to collapse. However, it didn't. I'm going to share this tab right here. So you're looking at the S&P over the last 5 days. On Monday, it was a little bit pouty. It didn't do much. It sort of went up. We earned back some of the losses, but on Tuesday, it ripped. So what happened? Well, it's emotions, right? It's the same story that we've been talking about for the last, I don't know how many years. The market is driven by headlines. The market is driven by emotions. Now, there is actually a bit of math and some trading that was going on that decided to push and pull the market back up. So I'll give you some information on that. But I just want you to understand that a large part of the market, again, is highly driven on emotions. And so let's talk about that. So going into the weekend, we knew that JD Vance and company, they were going to Iran to try and strike a deal. And the goal was that they'd come back and everything would be peachy and the market would go up. However, we found out on Saturday or Sunday that just wasn't the case. And so all of the day traders, all of the big banks, they got onto their desks and they started hedging, or I should probably say it's not so much hedging, but gambling that we were going to see a substantial crash come Monday morning. And so that's what they did. They placed a lot of short positions in the market. But then Monday rolled around and the market didn't collapse. Right? It sort of hung on. There wasn't a lot of craze happening. Those short positions then started to get squeezed. And so in order to stay in those positions or get out of them, they now have to go purchase those positions in the stock market, which acted as an upward catalyst. So in all reality, somebody, a bunch of people, gambled that the market was going to crash based off of pure emotions, but that didn't happen. And so when it didn't happen, right, they had to go close those positions or they were going to lose a whole lot of money. And so then, right, that acted as an upward catalyst. So then the S&P moves over past the 50-day moving average. And then now you have a whole lot of other things going on. Algorithms are starting to trigger a upward trend. And so they start buying in the S&P. We had some good news on semis. And so semis started to lift the NASDAQ. And now we are here, right? The market is now up 3% and everything feels a lot better. Now, that's not the entire story. There's a lot of other things going on. We'll talk about that, some of the economic indicators I want to get into. The reason why I tell that story is because it's so perfect, right? The emotional decisions, the emotional investing that caused this sort of craze in the market, this rip in the market. So I want to talk about something else now. I figured we probably should move on before I get too bit carried away. Let's go over to this one. So I want you to pay attention to this PPI index. So PPI came in at 0.5%. Now that's a positive number. It's a high number. Year over year, it hasn't changed, but the forecasted value was 1.1. So what does this mean? Well, it means analysts expected that producers' prices to exponentially grow, or inflation around the producing side of the market to grow considerably, obviously due to tariffs and the Iranian conflict. But what happened instead? It only popped up 0.5%. That's a good news. Now, if we whittle this down to the core PPI, so we strip out energy and food, which tend to be a whole lot more volatile, the core PPI is showing in at 0.2%, which is even lower again year over year, but also off of analyst expectations. So this means that the overall inflation on sort of consumer goods is cooling, meaning that the long-term stability around inflation is a much more optimistic outlook. We don't have this crazy spiraling out of inflation, right? We don't have necessarily everything going right back up to where they were. This puts the Fed back into a much better position to make a decision on rate cuts. Now, what will they do? It's yet to be seen, but this makes the case for rate cuts, right? Inflation is staying low. We know that as of right now, a large part of that inflation, this 0.5, is actually coming from energy. I think the number was, if I have it in front of me, let's see, yeah, the large part of this spike came from an 8.5% increase in just energy alone. And so if you're looking at this from sort of a consumer standpoint, we recognize that there's a lot of pain in the pain at the gas pump, pain from energy prices. But over the long run, again, we have that stability. We know that actual inflation is really actually cooling and getting more manageable. And so this is another good news. This is more good news. The other one I wanted to show you guys was this one. So the IMF, they recently just published this study on the overall outlook on the U.S. economy. And they found that the strong performance of the U.S. economy was supported by exponentially strong broad-based productivity growth. So expansionary fiscal policies and other impacts of policy rate cuts positively show that the U.S. economy is actually growing. It's getting more efficient. It's not all doom and gloom, right? It's a lot of heartache right now and pain at the gas pump, but for the most part, on a bigger scale, the market is growing. The economy is growing, and that's a really good thing for us. Okay, so where does that leave us right now? Well, like I said, economic indicators are pointing towards lower inflation. Our economy is actually growing. The market is going back up. There's end in sight in terms of this Iranian conflict. There's rumors that people are coming back to the table. Things are going to happen. The best thing that we can do is stay unemotional, right? Don't react initially to those big headlines. Try and focus on the good, because there is really a lot of good things going on out there. So again, happy tax day. Focus on the fact that $242 billion is being forced back into the economy as a non-inflationary stimulus. That is a good thing. Focus on the fact that our refund checks are up 11% year over year, thanks to the one big beautiful bill. That is another good thing. Focus on the fact that inflation is cooling outside of that energy tax, right? The Iranian conflict, the Strait of Hormuz being blockaded. Outside of that, inflation is steady. Inflation is actually coming down. And so that is a good thing. That is the good news. I'm going to remove this. I hope this was helpful. This is all I really wanted to talk to you guys about today. We'll be back probably next week, Monday or Tuesday. We're going to talk about some more inflationary numbers. But as for now, that's all. Have a great rest of your week, and we will see you soon.